Hey guys, Sarge here. Saturday, August 13th, if I'm not mistaken. Yep, it is. This was the stream last night on Liberty and Finance, and this is the little segment I think is worth listening to.
Now, I was watching one of your recent videos that you put out, and it showed...
By the way, guest is David Morgan.
The title on the screen was The Great Credit Contraction, and it was an inverse pyramid that showed, of assets in the world. And it showed derivatives at the top, and then all these different levels, and then at the bottom is this tiny little section of gold and silver. So it's like our world, like you're saying, is... There's so much distrust out there. All these assets right now are promises to pay, it seems like. And at the very, very bottom, you have what's real. Can you expand on that? And what does that mean for, if we're going to see this rush into precious metals, into safety, what does that mean for that tiny little section at the bottom of that pyramid?
Well, it means it'll explode in value. I mean, price, you could call it price, but the idea is, first of all, it's called the Exter pyramid, E-X-T-E-R. You can type it into Google. I actually have
Exter.
A copy of the original one. The one I showed on that presentation was more updated. I think it's from Trace Meyer, a friend of mine. And it's a little bit better because it's updated. The idea is liquidity. So when you've got to buy a house, you might have IBM stock, but you got to sell the stock, turn it into cash. Now you're liquid. Now you can buy the house or put the down payment on that. You want to buy a car, you might have a mutual fund, add some cash in your bank, you got to sell the mutual fund and, add it to the cash and, make the down payment on that car or buy it outright or whatever. So liquidity means that as you are more and more uncertain about what the value is of the assets you hold, such as a real estate portfolio, stock portfolio, or bond portfolio, corporate bonds, municipal bonds, any ETFs, any financial instrument, you start to lose faith in those. People start to cash out and get to what they trust the most, and that's cash. So that's why right up from the gold tip of the pyramid is cash. And it talks about physical cash, meaning physical euro notes, British pounds, U.S. dollars, Canadian dollars, those pieces of paper. Those are the most trusted. They're physical, tangible, I don't even call them an asset, a representation or promise to pay something. And that's what's most trusted by almost everyone because they're familiar with it. But once faith is lost in the cash, which happens at the end of these great empires or these great monetary cycles, then the people that have moved out of all their assets and into cash, or let's say changed their portfolio, maybe from having two apartment complexes, they sold them both, they have their residence and a vacation. So they've liquidated a great deal. Liquidate, again, get into liquidity, get into cash. So now they have a bunch of cash, and now they realize that it's losing value rapidly. And so they decide, what can I do? And the answer has been in the past and probably will remain so, to put it into something like gold. So there'll be more and more people seeking that asset, and it's a very small market versus the trillions of dollars. The real key is the bond market. I mean,
got sober? Telling you guys, I know we've been hearing it for quite a few years. It's coming, it's coming, it's coming. I know. But the Malwart lady there, I don't know. I would say that's the shot across the bow. Cheers. Sarge out.